This is a recording of Financial Mythbusting with Dawn Bennett for Sunday, July 13th, 2014. You can listen to this program live every Sunday morning from 11 a.m. to 12 p.m. right here on 105.9 FM and AM 630 WMAL.
Securities offered through Western International Securities Incorporated, member FINRA SIPC. The views expressed on this program do not necessarily reflect the views of this station. Proper advice depends on a complete analysis of all facts and circumstances. Listeners should consult their own financial advisors or conduct their own due diligence before making any financial decisions.
You're listening to Financial Mythbusting with Dawn Bennett.
I need a dollar, that's what I need. Hey, hey, well I need a dollar, that's what I need. Hey, hey, said I need.
And good morning. This is Dawn Bennett with Financial Mythbusting, and that's right, we're going to be talking about the dollar, or actually, to be more exact, the de-dollarization of the global economy. And you know what? At the bottom of the hour, we've got Paul Craig Roberts coming on. Now, he's the Assistant Secretary, was the Assistant Secretary of the Treasury under Reagan, and he's also the Chairman of the Institute for Political Economy. He's going to be talking about what de-dollarization means for America, what it means for the U.S. economy, and also what it means to you as Americans. And we're live today, so if you have any questions regarding your portfolio, I've been a money manager for 30 years, give me a ring at 1-855-884-DAWN, and that's D-A-W-N. And again, that's 1-855-884-3296. And also, if you want to send a question or comment the old-fashioned way, you can actually go to BennettGroupFinancial.com. Just click on the Contact Us in the upper right-hand corner of the page, and we'll actually answer you in this show, and or we'll give you a call next week, because I always want to make sure everybody has everything they need in order to make their financial decisions right at their fingertip, or we'll try it to answer you in another show. And also, one last thing, if you want to become a fan of Financial Mythbusting, all you need to do is like us on Facebook at Financial Mythbusting and follow us on Twitter at Dawn Bennett FMB on Twitter. And we're going to talk about the dollar. And we're going to be talking about how I think that de-dollarization has actually begun. You know, I want to read you some headlines that are actually in major and medium-sized and small-sized publications in print. And this actually starts back in April 11th of 2012. Now, this particular article title was in the Wall Street Journal, and it was Cambodia Takes Aim at the Dominant Dollar. And then there was another title that showed up, another article, and it said 10 reasons why the reign of the dollar as the world reserve currency is about to come to an end. Again, that was 2012. Here's another one from 2012. It's the beginning of the end for the U.S. dollar as the world reserve currency. And then in 2013, there was a title of a show actually on CNBC called Is the Dollar Dying? Why the U.S. Currency is in Danger. And then we had 9 signs that China is making a move against the U.S. dollar. Did you see any of these headlines? Or how about this one? Is the dollar really losing its reserve currency status? That was 2013. It was in the Washington Post. Here's another one for 2014. De-dollarization continues as China starts direct trade with the United Kingdom. Here's another one. Russia holds de-dollarization meetings with China, with Iran, both willing to drop the U.S. dollar bilateral trade. Again, this just showed up in 2014. Do you ever see these headlines? Do you ever take time to read them? Because I think you need to. Because you should be at least a bit curious about how a weak dollar is actually affecting you today as an American and also affecting you as a consumer. I mean, do you believe a weak dollar could make you poor? I want to hear from you. I'm at 1-855-884-DAWN, and that's 1-855-884-3296. You know, I actually believe that we are in some type of post-dollar economy. But the thing is, nobody's talking about it. Well, nobody's talking about it here in America. They do seem to be talking about it worldwide. And I'm going to go into deeper thoughts about that as I jump into my thoughts of what happened this past week. But I think we need to, because this will impact everyone. So what do you think? Give me a call. I'm at 1-855-884-DAWN, and that's 1-855-884-3296. I want to know if you think a weak dollar could make you poor. Again, 1-855-884-DAWN, and that's 1-855-884-3296. And while I'm waiting for your calls, I am going to throw out a quote by George Orwell. Now, he said, whoever is winning at the moment will always seem to be invincible. It seemed appropriate for this past week because I'm not talking about an athlete. I'm not talking about a particular company out there. I'm actually speaking about the U.S. dollar. I'm also speaking about the Federal Reserve. See, to my mind, the Federal Reserve has failed. The Fed told us that printing the dollar would equal growth. And in their effort to prove this theory, the Federal Reserve embarked on quantitative easing 1, quantitative easing 2, quantitative easing 3, quantitative easing 4, Operation Twist 1, Operation Twist 2, and at the same time kept interest rates at zero for over 5 years. Altogether, the Fed has printed nearly $4 trillion, and the end result has been the single weakest recovery, if you want to call that, in 80 years. So at this point, you have to ask yourself, just how pungent does today's economic course need to smell before everyone understands it hasn't been recovering? But actually, it's almost flatline dead for at least the last few years. I mean, think about it. Our first quarter GDP had a print of nearly negative 3.0%. And the Fed had the audacity to tell us we are recovering, quote unquote. The fact that the economy shrank like this despite all the Fed's interventions over the last 5 years is proof, point blank, that the Fed's economic models are wrong. Now, the question being asked all over the world is, will the Federal Reserve be successful in assisted economic suicide of the U.S. economy, and with that, the value of the U.S. dollar? Good question, right? Everyone's asking it but us. You see, in my opinion, perhaps the greatest crime committed by the Federal Reserve is the destruction of the American dollar. Since 1948, the dollar has been the world's reserve currency. Dollars are still accepted almost anywhere in the world. But I think these days are numbered. Since the 2008 economic crisis, the Fed's printing binge has driven the value of the dollar into the ground. Other countries have been forced to devalue their currency in order to maintain competitive prices for their export products. And now they aren't putting up with that anymore, which is why I believe de-dollarization of the world economy has begun. You know, the Federal Reserve's crazy experiment of printing money out of thin air is a trap set for all of us here in America as well as the rest of the world. And before the end of this decade, if there is still a U.S. dollar around, it's not going to be the U.S. dollar as we know it today. I'm seeing a very significant shift, and it's taking place behind the scenes, and unfortunately, it is being appreciated by very few. And the shift that's happening is this ongoing de-dollarization of the world. You see, while our massively indebted administration has hopes to divert our attention of what's left of the U.S. dollar's impoverished existence, and they're doing this with flashing lights and glitzy propaganda, just like, you know, part of the propaganda is showing all-time market highs on a daily basis when there's absolutely no rhyme or reason for it to be trading up there. You know, other countries like the BRICS, this is Brazil, Russia, India, and China, well, they're morphing into anti-dollar alliances. Let me give you an example. On June 10th, 2014, Putin's economic advisor, his name is Sergei Glazev, actually published an article outlining the need to establish an international alliance of countries willing to get rid of the dollar in international trade. And they're also willing to refrain from using dollars in their currency reserves. That's pretty strong. I mean, the ultimate goal would be to break the back of the U.S. dollar. And by the way, at the same time, when this publication came out, actually, Russia announced this really much anticipated energy deal with China, which is the first step in breaking the petrodollar's stranglehold over the rest of the world. As you know what? They're not going to settle any of their trading in dollars. They're going to settle their contracts in the yuan and the ruble. You know, both nations have admitted they're eager to make or to move away, actually, from a U.S. dollar reserve currency. And their actions are telling us they mean business. Which is why I'm saying the U.S. dollar domination is probably coming to an end. And unfortunately, there's even more that's driving the nail in the dollar coffin. So the U.S. government's appalling arrogance, and this has happened for many, many years when it comes to the banking system worldwide, they have a reputation for being bullies, and they do bully around foreign banks. And the last one, this is the one as of late I'm speaking of, is the U.S. multi-billion-dollar fine that the United States wants to put on BNP Bank. This is a French bank. Now, the French have taken this very much to heart, so much so that the French National Bank governor, a gentleman by the name of Christian Noyer, and a member of the ECB's governing board, said that the U.S. versus BNP Bank case will encourage diversification from the dollar, quote unquote. He also continued to say that China has decided to develop the renminbi as a settlement currency for worldwide use, unquote. So let me put all this into context for you. The head of the French Central Bank and ECB member just issued a direct threat to the world reserve currency. And for now, that's the U.S. dollar. So, if this current trend continues, soon the dollar is going to be abandoned by most of the significant global economies. The Federal Reserve's mismanagement and Washington's bullying will make even former allies choose the anti-dollar alliance instead of the existing dollar-based monetary system. The point of no return for the dollar may be much closer than generally thought. In fact, I think the greenback may already be past its point of no return. The question I have for you is, what are you doing in your portfolio in order to hedge against it? Because you need to be thinking in those terms. So I'm going to ask again, do you believe a weak dollar can make you poor? I want to hear from you. I'm at 1-855-884-DAWN, and that's 1-855-884-3296. And I'm going to talk to James in Alexandria. Hi, James. How are you?
Good morning, ma'am. The weak dollar is already making people poor.
Yeah, I think so. So how is it affecting your life?
It just makes getting capital for the business a little more difficult. Ironically, we get more interest from foreigners in new capital than we do from people in the United States. People are just sitting on their money. I mean, the highest tax rate in the world for business is keeping a whole lot of the dollars overseas, which is an extremely artificial situation. There's trillions in other people's bank accounts around the world.
Well, James, let me ask you something. I mean, my understanding is you can actually see it in the U.S. Treasuries. A lot of foreign entities, sovereign entities, are actually divesting themselves away from treasuries. I mean, it used to be the number one holder of our treasuries with China. Today it's us. It's the American taxpayer. It's the Federal Reserve. I mean, do you think America can actually survive a post-dollar world?
Oh, we'll survive. It'll just be ugly. But there was a question I wanted to ask you because of your abilities in analysis. I'm a student of the history of business, and this looks a whole lot like 1938 again. And, a recovery that wasn't a recovery, businesses sitting on their money, sitting on their capital, and just not doing much of anything. I mean, the only way out at that time was a world war, so... Hey, could that happen here?
I don't know. I think the biggest fear for me is that I don't think that the Federal Reserve has an exit plan. And without that exit plan, it could be worse. I don't think anybody in America wants to go to war. We can't certainly afford it. In 1938, we weren't even the international reserve currency. We became that in 1948. So that certainly helped us dig our way out. But now, all these countries, they don't want to rely on us. To be the international reserve currency of choice, I've said this over and over again on the show, you have to have a strong political system and you have to have a strong economic system. People around the world don't think we have either anymore. So, instead of using it to our advantage to be able to dig our way out of it, we seem to be digging a bigger hole.
Exactly. Who was the international reserve currency in 1938? Think about that.
Right. I think it was UK?
The pound.
That's right. It was the UK.
Pound.
Right. So it took time actually to get away from that. But I think again, it's now they're walking away from us. I mean, think about this. Even our own allies are starting direct trading in the pound and the renminbi, right? So the UK, our ally, is now doing direct trade with China. They're not going to execute any of their deals in the U.S. dollar. Imagine what that means to us. So I continue to ask this question, does everybody out there have a game plan if the dollar goes away? James, I want to thank you so much for calling in. It is an important question you need to be asking yourself. Does your portfolio include non-dollar denominated assets? It's something you need to do in order to hedge. I know you may think you're small and you can't do it, but there's always a way to do that. So think about this. Do you have a game plan if the dollar goes away? And remember to stay tuned because when we get back, we're going to be talking more about this subject, and I want to hear from you. I'm at 1-855-884-DAWN, and that's 1-855-884-3296. And here's a mantra you should be saying to yourself, strong dollar, strong currency. And we'll be right back.
105.9 FM and AM 630 WMAL. This is Financial Mythbusting with Dawn Bennett.
And we're back, and I shared it with you a mantra I said you should be saying to yourself every day, which is strong dollar, strong currency. It's much more than a currency, the dollar, since economic history indicates that no country has ever achieved greatness nor maintained its greatness if it debased its currency. So I'm actually going to be playing you a clip. Now, this is going to be Krugman Paul Krugman, he's a New York Times columnist. You've probably heard of him. And he was appearing on Morning Joe. It was actually on January 23rd. This is the last time I've heard him talking about this. But he's talking about why debasing the dollar, having a weaker dollar, is actually good for you. Take a listen.
How exactly are interest rates going to rise if the economy remains depressed? There is a whole question there about how this story is supposed to happen. If people are going to actually get worried about the U.S. someday inflating away its debt, even if you work that through, it's going to mean a weaker dollar, which is actually a good thing.
So let me just give you a heads up. Weakening your currency isn't a way for a strong economy. If it was, then Zimbabwe would be G1 right now. It's ridiculous when people say that type of thing, and you need to understand something again. No country has ever achieved greatness nor maintained its greatness by debasing its currency, period. So I ask you this question. Can America survive a post-dollar world? Do you even know what that would look like? I want to hear from you. I'm at 1-855-884-DAWN, and that's 1-855-884-3296. I mean, fears about a weak dollar are beginning to reach fever pitch, I think, at least outside the United States. But are these worries justified here in the United States? Can you imagine your life without dollars? I want to hear from you. I'm at 1-855-884-DAWN, and that's 1-855-884-3296. I mean, have you ever engaged? I want you to take a look at a world, a post-dollar world. Maybe it will be like engaging in barter, trading one skill for another. Have you ever done that? Can you imagine your life doing that? Do you think America can actually prosper without the U.S. dollar? I want to hear from you. I'm at 1-855-884-DAWN, and that's 1-855-884-3296. I know people like me. I'm a financial services CEO. I think about the dollar role in the world economy every day. Every day. I mean, we design our portfolios around it. But I want to know if the same is true on Main Street, USA. Does the average American ever talk about the future of our country's currency? I talk about it every day with our clients, but I don't get to speak with you every day. So I want to hear from you. I'm at 1-855-884-DAWN. I mean, even if we don't talk in those kinds of explicit terms, that sort of everyday worries and complaints about the ever-increasing cost of life in itself is a commentary on the dollar. You need to kind of come to terms with that. I mean, think about it. China and other nations are dumping U.S. treasuries at a high rate, and the U.S. debt can't be paid. This isn't exactly a positive sign for the dollar. So do you have a solution to fix this problem? I'm at 1-855-884-3296. I mean, looking back in history, we have seen many civilizations collapse because their currency went bust. And it feels like we're heading in that direction. I just don't understand why nobody's talking about it. Literally trying to find a sound clip for you to hear from someone who's worthwhile listening to was difficult. I mean, we've got a few from 2013. I've got one from 2014. Nobody's focusing on that. So let me just share this with you. I have a solution to this. We need to go back on the gold standard. It would strengthen our dollar. No one would question it. People would be back buying our treasuries. This is the way to do it. And also, we have to drop our corporate tax structure. It needs to be the second lowest in the world, not the second highest. So, honestly, I think we need to be a lot smarter about who and what we do here in the United States. And part of that also is who we put in leadership positions here in America. We need to have a game plan. Otherwise, the dollar's going to go away. And it's something I have a real problem with because this is my country. It's your country. So, do you think the world owes us to support the dollar? Apparently they don't. They're not acting like that. I mean, we have taken care of so many issues for them for so many years, but they're not supporting us. Even our allies are doing deals without trading in the dollar. They don't want the dollar as the international reserve currency of choice. What are your solutions? Give me a call at 1-855-884-DAWN, and that's 1-855-884-3296. And again, I think we need to be a lot smarter about who we put in leadership position here in America because I don't think the ones we have now are actually getting the job done. You know, we're going to be heading into break here, and I just want to remind everybody that Paul Craig Roberts, who used to be the Assistant Secretary of Treasury under Reagan, and he's actually the co-author of Reaganomics, he's going to be at the bottom of the hour. You want to listen to him. He's been around for quite a while because I'm really going to focus in on him. What will happen to the average American if the dollar goes away or it loses even more value? What that means to you, the listeners of Financial Mythbusting. As we step into break, remember something. The mantra that you need to constantly focus on, which hopefully will get us back, which is strong dollar, strong currency. Don't let anybody convince you otherwise. Strong dollar, strong currency. It's the only way to bring back the United States. This is Dawn Bennett with Financial Mythbusting.
I need a dollar, 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 that's what I need. Hey, hey, well, I need a dollar, dollar, dollar.
Welcome back to Financial Mythbusting, and I'm Dawn Bennett. Dr. Paul Craig Roberts is here. Roberts is an American economist and chairman of the Institute for Political Economy. He served as an assistant secretary of the Treasury in the Reagan administration and was noted as a co-founder of Reaganomics. He's a former editor and columnist for the Wall Street Journal and Business Week and has testified before congressional committees on 30 different occasions. As an author of 12 economic books and numerous political economic articles, Roberts was honored with the Warren Brooks Award for Excellence in Journalism, and in 1993, Forbes Media Guide ranked him as one of the top 7 journalists in the United States. Back in April of 2014, Roberts wrote an article titled, "Is the U.S. or the World Coming to an End?" which questions if the U.S. dollar will be abandoned and collapse in value, or if Washington will soon be in military conflict with Russia and China, which could even be worse than the collapsing dollar. And this is where I want to start today. Dr. Roberts, welcome to Financial Mythbusting.
Well, thank you.
So doesn't the role of the dollar as an international currency create systemic risk for the United States?
Well, it creates systemic risk for the rest of the world for 2 big reasons and a bunch of small ones. One of the big reasons is that the Federal Reserve has been creating huge numbers of new dollars in the past few years, and these dollars are not matched with an increase in real goods and services. So the money supply is increasing far beyond the scope of the real gross domestic product, and that implies a fall in the value of the currency, and the rest of the world holds huge amounts of dollars because it has been the world reserve since the end of World War II. So the rest of the world is facing the systemic risk of their existing holdings in dollars being diluted by the rate at which the Federal Reserve has been creating them. That's one big risk. The other big risk for the rest of the world is that the dollar payment system is what gives Washington the ability to impose sanctions on other countries when they don't do what Washington wants them to do.
Right.
So to participate in the dollar payment system, any government that does that essentially is ceding its own sovereignty to Washington. So these are huge systemic risks for the rest of the world. The advantage for the United States, of course, is that it can impose its will on the rest of the world. And the other big advantage of being the reserve currency is that you can pay your bills by printing money. And this is the side of the reserve currency that Washington has used, and therefore is calling into question continued participation by a large part of the world in the dollar as reserve currency.
Do you think the United States and the rest of the world believe that the Federal Reserve is borrowing returns from the future?
I don't know what they believe. I think what's happening is that the Treasury, the financial regulatory agencies, and the trustees of the New York Federal Reserve Bank, these are all the top bankers. So the bankers that produced the financial crisis are the same people who are in charge of the policy dealing with it. It's the bank executives who cause the trouble, who are running the Treasury, who are running the Fed, and who are running the financial regulatory agencies, and they are primarily concerned with protecting their own banks from the bad policies that they presided over. And so the policy of quantitative easing, which the Fed sometimes pretends is directed at helping home mortgages and stimulating the economy, the real purpose of this policy is to prop up the value of the debt-related derivatives on the balance sheet of the 4 or 5 big banks. Because debt prices move in the same direction together. So when the Fed buys bonds, pushes up the price of bonds, and the price of all the debt-related derivatives rise with them. And so this policy is mainly served to improve the solvency, the balance sheet position of the big banks.
So do you think the dollar as we know it, as Americans know it today, will it be gone within 3 years, 4 years, 5 years? Do you have that sense that it's going away?
Well, I don't see how it can retain its exchange value when such a huge supply is created, when so much new debt is created, and when the authorities in Washington threaten other countries who use the dollar. They either going to put sanctions on them, or they penalize the banks, like recently happened to the big French bank.
Right.
Washington stole $9 billion from it. Now they're after the Commerce Bank in Germany. And so a system that only works for Washington, it hurts everybody else, that would be in danger even if the dollar wasn't being printed in huge amounts. So it is a puzzle to me that the world hasn't already abandoned the dollar. And in fact, much of the world seems to be in that position right now. We have the BRICS, Brazil, India, right, China, Russia, South Africa, who are forming up their own international payment system and their own kind of international bank. And it will not be using dollars. They're going to settle their trade in their own currencies. And we saw recently the big energy deal between Russia and China, right, in which the dollar is not the currency. So I think we do see already movement of countries away from the dollar.
So let's talk about Russia and China. That deal, which was a little bit over a month and a half ago, Russia announced that much of the Holy Grail, this anticipated Holy Grail energy Gazprom deal with China, happened. They signed it, and I believe it was actually an agreement to help break the petrodollar, or break the petrodollar stranglehold on the rest of the world. Do you think that once the bilateral trade in the ruble or the renminbi is established, that the rest of the world is piggybacking already? Do you think that that's already started to happen?
I think that the United States in the 21st century has been very arrogant in its approach to all other countries. It tells them such things as do as you were told or we'll bomb you into the Stone Age. It tells foreign banks who they can do business with. Yeah. If you do business with some country we don't approve of, we're going to steal from you or prevent you from operating within the United States. In other words, that's what he told the French bank. Fork over $9 billion, your year's profits, or we're going to freeze all your operations in the United States. Well, this type of behavior creates resentment, and it also gives people a good excuse not to participate in your payment system. So I think that the movement will go forward, and if you also take into account that Washington's decision-making in the 21st century has been really poor. I mean, they told us that Iraq had weapons of mass destruction, and they had to take them away, and it would be a cakewalk. It would take 6 weeks, and it would cost $70 billion, and it would be paid for by Iraqi oil revenues. Well, according to the Nobel economist Joseph Stiglitz and the Harvard budget expert Linda Bilmes, Iraq didn't cost $70 billion. It cost $3,000 billion. And it wasn't paid for by Iraqi oil revenues. It was paid for by piling up debt on the American taxpayer. And then you go into Afghanistan, and it's now 13 years, and they can't defeat a few thousand lightly armed Taliban. And wherever you look, you see Washington just doing stupid things, making bad decisions, piling up debt and costs. And I think this also then hurts its reputation and causes people to change their attitude. The positive attitude toward the United States is disappearing from the combination of things we've talked about.
So how pungent does the dollar's corpse need to be before the Federal Reserve and Obama and Washington actually come up with a game plan to save the U.S. dollar?
Well, as long as they have to bail out the banks, and of course, we don't really know the situation in the banks. You know, there's a lot of concern about the derivatives they hold. You know, the one bank, for example, I think it's J.P. Morgan, it has derivative exposure that is larger than the combined value of the U.S. bond and stock markets.
And put on top of that margin exposure. The margin exposure has never been this great ever.
Right.
Yeah.
And all the banks are tied together in these bets. Most of these derivatives are interest rate swaps. They're bets on interest rates. So they're betting with each other on which direction interest rates will go. And then after they make a bet with one, they turn to another and offset that bet with some other one. And the consequence of all of this is unknown. So I don't think the Federal Reserve could create enough money to bail out the derivative thing.
And to be clear, if it does create money, it debases the currency every time they turn on the printing press.
Well, yes. It can hurt the currency either through domestic price level, which it hasn't done much of because most of the money the Fed has created has not gotten into the economy. It's sitting in the bank reserves.
Right.
But the rest of the world watching the money creation, it can bring inflation into the economy through the falling dollar exchange rate. So if the world starts looking at the dollar with the jaundiced eye, using less of it, moving away from it, and the exchange value of the dollar drops, then the prices of imports, on which the United States now is heavily dependent. Just think about all your clothes, all your electronic components, all of this is imported, your shoes, increasingly food, and of course energy. And so when you have these kinds of heavy dependence on imports and your currency weakens, then you get inflation in that way. And so it is a very dangerous situation, and don't really know what the Fed could do about it.
So if there still is a U.S. dollar around, will we know the U.S. dollar as we know it today, or is it going to be tied to a very different monetary system?
Well, I think it will lose a lot of its value, and therefore the standard of living in the United States will drop quite a bit. I don't know that there will be a new world reserve currency. I don't think the world any longer needs a reserve currency. You see, the dollar came into that role at the end of World War II, when all the other economies in the world were destroyed, or else still in third world status. The United States was the only country that had an economy. You know, the Japanese were blown up, the Germans, the French, the British, the Russians. China had never reached any kind of industrial and manufacturing development. So that's the reason the dollar became the world money. There was no other way to make payments. Well, today many countries have sensible, usable, valuable currencies, and they can trade with one another in their own currencies, as the BRICS are beginning to do.
Dr. Roberts, we have about a half a minute left. I just want to ask you, usually the common man doesn't feel it when things go wrong in our monetary shifts. What's going to happen this time around? Are they going to feel it? Are they going to win? Are they going to lose?
Well, I think they will feel it through loss of jobs, loss of income growth, and loss of purchasing power of the currency. So I think it will be a substantial blow to Americans. I hope I'm wrong about this and nothing like this happens. But from everything we know in economic history, the stage is set for a downward adjustment in American economic power.
It's sad. Thank you so much, Dr. Roberts, for being on the show. And this is Dawn Bennett with Financial Mythbusting. And when we get right back, we're going to be talking about gold and what it did this past week.
This is Financial Mythbusting with Dawn Bennett.
And we're back, and I've got to tell you, we have a full board of callers, and this is one of the reasons why we're going to be going to a 2-hour show. We're going into syndication nationally, and I want to remind everybody that we're going to be on Radio America. And it's going to be from 10 a.m. to noon on Sunday morning. So we're going to have a 2-hour show, and we're doing it because we have gotten so many callers, and I never can pick them all up, and I want to apologize. I will say this. I do try to call every single one of you back during the week just to say thank you and to answer your question because I know they're important to you. I want to make sure that, again, you have at your fingertips everything you need in order to get through this changing economy that we're in. But one of the things I wanted to talk about is, gold and silver actually had a great week this past week. Gold was up 1.27% just for the week, whereas the Dow was down negative 75 basis points and the S&P was down negative 90 basis points. The Russell 2000 was down negative 3.99%. Even the NASDAQ was down negative 47 basis points. And gold was up 1.27 again. But then again, silver was up 1.39. It actually, silver had this week, which is considered the ugly stepsister of gold, but I don't think it's going to be that in 2014. It had its best run that it's ever had in 3 years. And I was reading a report from a group called Goldcore on silver, and so far you should know that silver is up 10.3% year to date, and they're saying it has possibility of hitting $150 an ounce. Now, again, that would be in a number of years, and there are no promises and guarantees it's going to get there, but the reasoning is that silver has a very small global supply, silver has a unique properties to it, silver has increasing technological, industrial, medical demand, silver has increasing investment demand, and silver is undervalued right now versus gold. So I think maybe the strong demand might be able to get it to $50 at least this year, but they're saying in the next couple of years, 150. Wouldn't that be fascinating? And to everybody, I want to remind you that we're having another seminar on July the 31st. It's Thursday, and we're doing it a little bit different. We're having it at a steakhouse in Chevy Chase, Maryland. And if you're interested in attending, give us a call at 866-286-2268, or you can email me at info@bennettgroupfinancial.com, and we're going to be talking about what I call the retirement survival seminar of all times. I mean, we are on the precipice of the greatest retirement, I think, crisis in the world. There's a different way you need to be managing your money. And as you can see with the way the markets are going, part of that is taking a look at precious metals, not only just to hedge yourself in what you own in stocks, but also to hedge the U.S. dollar. I had this show today on the dollar because I think it's important that you focus on it. It's something that a lot of people don't talk about, but it will interfere with your lives. If we don't get this under control, at least the U.S. government get it under control, you're going to have to do it yourself. I also want to remind everybody else, too, again, that seminar is Thursday, July the 31st. And if you're interested, give us a call at 866-286-2268. And also, if you're interested in purchasing any gold or silver coins or bars, you can do that. Put it in your IRA account. Give us a call. My company does that. We got in the business of this because of you. You asked us to do it, and we got in. And now we're serving a lot of people across the United States. They're coming to us for their gold and silver coin purchases or their gold and silver bar purchases. Again, give us a call at 866-286-2268. That's 866-286-2268. And this is Dawn Bennett with Financial Mythbusting, where politics and the economy intersect.